Hello traders, the title of this video is 24Elliottwaves trader maps out Nikkei 225 index at the start of 2019. Alright, so we are looking at the Nikkei 225 index, the Japanese index that represents the 225 blue chip stocks. Alright, and we're going to map out this Nikkei 225 stock index. Let's get started. I've done my homework. You can see the lines on my chart in order to save times. Alright, we are Elliott traders. Do we have enough data for Nikkei 225? So that's what I got on my chart now from 1985. It's not bad, 1985. Up to 2018, that's a long time in the life of a human being. Were you born that time in 1985? All right. Okay. Or are we missing some data here? All right. Was it from 1975, the trend in fact? It's a piece of the trend missing. That is the question. Or is that all the trending phase? I doubt it. I doubt it that this is all the trending phase. All right. So I'm going to choose my word carefully. All right. If we have more data somewhere below here, if it is a proper trending phase, then all this that we see on this chart will be a correction of that trending phase. The price is now breaking above, the correction range, talking about the two trend line here, because the correction was that the price came down, sharp move down, 1, 2, 3, and then it enters this consolidation phase, just consolidating for years. Have you been trading this Nikkei 225? You should notice the market pattern. You see. So what I say to traders: if the wave structure are too complex, you go back to the market patterns. All right, you map out the chart. Or if you think that you have insufficient data, or you give priority to mapping out the chart. All right. So if there was a proper trend, then this is a corrective phase. First leg price came down 1, 2, 3, and then entered this consolidation phase. So all the professionals were doing, they were just selling at the top of that trend line, and they were buying somewhere below it. When it popped out, you see, it came out here. All right, it came out here. What has happened? What the professional will do for new traders? All right, they will project half of that red channel in the direction of the price. So, are you with me? So, talking about market geometry, they will roughly project. So, this is half of the channel. So they will measure the width of that half, see here, and they project it in the direction of the price like this, and then they will draw a line that is parallel. Something like that. They will draw a line that is parallel to the lower half of that channel. So you can see the price came almost, if I adjust this line, almost to the edge of that projection, and they found a support before going back inside that channel. So all in all, if there was a proper trend before, the correction was 1, 2, 3, and then it goes into consolidation, inside that red channel. People were buying along the lower part of the channel. As it came out of the channel, they projected down. That's the midpoint target right there. It found a support, bounced back inside, from a higher low after escaping the bearish pressure, after coming out of that declining channel, which is very bearish. It goes back inside it, forming a higher low. This is a very interesting bullish setup. And then from there it went back to the top. Again, you can see here it went outside the channel again. Here the professional traders using market geometry we project again, okay, using the half of that channel. So we draw a trailer like this, okay. Alright, so it couldn't come all the way to the edge of that projected channel. We can say that he almost, okay, he stopped near the media line of that smaller channel. Smaller channel, talking about from that blue line and the top of that red channel, he stopped near the media line of that projected smaller channel. Alright? I'm going to remove some of my line. I hope you have understood what I've said so far. Alright? So this is how they were trading it. So bear with me because I'll be talking about if, alright? It's important in this case. Alright? So a trend in fact probably was in place, and then a correction has begun. Here it is. And a trader may say to me, George, it was a WSY where the W is 1, 2, 3. Where is the X? Well, there was no X. You see? So you just went 1, 2, 3, and then say, all right, consolidation. So I know that I may say, oh, this is the W, this is the W all the way here. So they may say, George, it's in fact this move of the first leg of the correction is 1 all the way down here, 2, 3, W, and then consolidation in a triangle. Blah, 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 blah. All right, George. And now this is the X. In 2003, commodity boom. You remember before yours? 2003 commodity boom. And then boom, this is the X. Now this is the Y wave. Do you agree with that? Okay. But one thing is that we all agree with is that there was probably there was a trend, all right, and from 1989, long time, Japanese economy was in depression for years, for decades. So from 1999, the Japanese index Nikkei 225 was correcting that trend. So since 1989, the Japanese economy did not see any bullish trend at all up to today. Right? See 2012, see here. So we all agree that there was a correction from 1989 up to 2012, no question about it. Now the question I'm asking now, like many other traders, is this the beginning of the new trend for the Japanese economy? So does it also mean that if the Japanese economy is starting a new trend after dwelling in the depression for many decades, does it mean that after the fifth wave of the S&P 500, the expected correction will last for some time? Does it mean that it will be bearish for the S&P 500? Or because the S&P 500 was trending from 2009, we didn't see any trend for the Nikkei 225. So those are the questions we can ask at this point in time. But all in all, probably there was a trend and the correction lasted too long. Okay, the minimum we will say that it ended in 2003. But in my view, that correction probably has ended in 2009, even 12. Is this the beginning? So I'm going to place a vertical line as a reference point for 2009. I will also put on this chart because those are, if you are using Elliott wave, you need to do that. 2003, another reference point. So probably this is the X, W, X, Y wave. Okay? And then, now the question is, which I'm still waiting for you to answer that question. It is the beginning of a new trend. First wave, second wave. Or is it From here now, going now, is this still the first wave? Probably. We may see, we will see. But it's just a speculation at this junction. All right? It's just a speculation at this junction. Why? That's a very, very, very good question. Talking about WXYY, you may disagree, but we all agree that there was a correction, a bit messy. What do you see? It's a consolidation, mainly consolidation, all right? But there was one move here that's very interesting that looked like a trend in Fed has fell in 2003 during the commodity boom. And then 2007, 2008, a financial crash brought it back to the beginning here again, forming a double bottom chart pattern here. Can you see a double bottom chart pattern? All right? This low and this low in a zone of 7107, 7107. It's a double bottom chart pattern. So when we are talking about double bottom chart pattern, let me put it there for now. Because a lot of traders, they know about chart pattern, they say, oh, George, what can you teach me about double bottom chart pattern? I can teach you a lot. George, you're too arrogant. All right, maybe. So if we call this the double bottom chart pattern, what do we need to say more? If it's a double bottom chart pattern, there is always a notch. That's the notch. That's what we call the neckline. That's the notch of that double bottom chart pattern. So at this junction, my friend, all right, all in all, what I would say to you, those that are trading Nikkei 225 is that priority to bullish signal above the level of 18250. The price now above that, it managed. So you see, first time it bounced up above that knot or neckline of double bottom chart pattern, but the bearish trader pushed it back down. But now it formed a higher low. So we can say that, in fact, recently, the Prime Minister of Japan said that the fundamentals are strengthening in Japan. Mr. Abe said that. So their problem was that the inflation was very, very low in their country, and they couldn't get inflation up. So the economy went into depression, big time for many years, when the rest of the world was enjoying a better economic environment. So Japanese economy was in depression for a long time. So is he now going to start a new trend? This is a very interesting scenario for investors, for long-term investors, to keep eyes on the Nikkei 225, and time the market accurately for long-term purposes. All right, so priority bullish signal above 18250. So you do not want to forget that level because it's the neckline with that double bottom chart pattern. You can also see on my chart this inverted head and shoulder chart pattern. This is the left hand side shoulder, this is the right hand side shoulder here, and this is the head here. Alright, can you see that? If we use the measuring stick of the depth of that inverted head and shoulder chart pattern, and we project it above the neckline, we have a target at 28872. 28872. That's the ultimate target for Nikkei 225, talking about medium-term bullish target. 28872. You can quote me on that. So what I'm saying to you is that this index has a high chance, if the S&P 500 starts printing, so to speak, the fifth wave after that expected fourth wave, that Nikkei 225 can benefit from it and manage probably to reach that ultimate target at 28872. Does it mean that definitely it will get there? No. It may not, okay? Where are we now? That's a very good question. So what have I said before? When we set ultimate target like this, 28872, there is a midpoint target. How do we calculate that? We divide our measuring stick into two, or you apply Fibonacci retracement to that length, and you highlight the 50% Fibonacci retracement level. The midpoint target for that ultimate target is somewhere. Did you spot it? If you did, well done. It's somewhere here. somewhere, roughly. Oh, let me breathe in at least. Roughly, I said, I didn't say accurately. Roughly. You say, Joe, you like that word so much. Okay. So that's the midpoint target for that ultimate target. You see, that's where the price did stop. Didn't I say at the 24 Stock Trader YouTube channel that no financial instrument will go up or down for no reason? It's always headed to a specific target level. For the NIKKEI 225, that specific target is what? Did you change your word? Did I change it? I think I moved it. 28875, something I said. Look where I am now. I think I changed it now. That's not what I said before. Now it's 28785. Is that correct? 28785. Is that what I said before? Okay. And the midpoint target is at 23452. That's where the price did stop. Can you see that? Can you see that? The midpoint target. Can you see that? Yeah, you can see it. Using either the inverted head and shoulder chart pattern target or that double bottom, okay, chart pattern here. The pattern is, there are many patterns here, but I don't want to, you see, we can argue again and say that, look carefully, if you like, because it's all about keeping your eyes wide open as an Elliott trader. So you want to train your eye to spot things. So it's good for you to see those things that I'm showing you here. So there was another one here, this one we call slanted, when you see, here, this is a normal inverted head shoulder pattern where the left-hand side shoulder and the right-hand side shoulder are almost all in horizontal position. And this is not horizontal. So we may argue, another trader may say this is another head. This is, you see, pull back, rally up, this is another left-hand side shoulder. This is another dodgy, messy right-hand side shoulder again here. So we see a double bottom chart pattern, a first clean cut inverted head shoulder chart pattern, and another slanted, okay, inverted head and shoulder chart pattern. All right, and we measure the depth of that chart pattern. We project it up, ultimate target. If I say that exactly 28785, is that what I said before? And the midpoint target 23452. Those are the key level. Professional watching. I can explain to you now. All right. Like what I said to you earlier, that no financial instrument go up and down for no reason. They always headed to a specific target level. You want to remember that. Now, so professional did draw this level before the price reaches that level, and they already had that line there. You will do exactly the same thing. So apart from, we will argue that from 2009, I put a pitchfork through here, choosing 3 points. First point here. Second point there, can you see that? Consolidation, and the third point here. For those of you who are new to the topic of Pitchfork 2 trading, please go to www.dayprotraders.com. Check out the webpage that we title Andrew's Pitchfork 2. After that, check also the second page that we title Pitchfork 2 Trading. If you want to know more, YouTube search Day Pro Traders YouTube channel and look out for the playlist, okay, Pitchfork 2 Trading playlist by Day Pro Traders YouTube channel. All right, so you can sit down. Okay, what is the favorite drink in Japan? All right, is it beer? Okay, drink your favorite drink, okay, or tea or whatever, and then watch the video so you may master the Pitchfork 2. So I put my Pitchfork 2 on my chart using 1, 2, 3 points. That will allow me to determine the possible path that the price will take. You see that the price stay within the boundary of the Pitchfork 2, but what the price has done, it now went above the Pitchfork 2. What is it telling me? It's telling me that the bullish momentum is increasing. The price is escaping the first Pitchfork 2. It's now headed to another level, but we cannot just rush and go and buy anyhow right now, okay, because the price at midpoint target is pulling back a bit, retesting, okay, the median line of the upper half of the Pitchfork 2. So all I would say to you at this point in time, as we are talking about 24 Elliott wave trader, maps out Nikkei 225 index at the start of 2019. Because in 2019, people will be talking about a new trend in Japan, but that will depend also on the S&P 500 to a certain degree and how the economy in general in Japan, most importantly, the market sentiment relating to Japan. To move on very fast, you can see that I draw that red channel that I was talking to you first. You see that red channel, so it came down, went into that red channel. We project that channel, all right? Because the price went above that red channel, we project it one more time. Where's my measuring stick? This is it. It's the measuring stick of the width of that channel. As the price went above it, we project it one more time. This is what we call market geometry. That brings that to this level, this red line. Price went above that first projected channel, the projected channel, this section here. It went above that projected channel. We project it one more time, bringing us again right here. So not only the Nikkei 225 is on the edge of the midpoint target at 23452, it's also on the edge of the second projected channel of our original red channel. Did you see that? All right. If you want to know more about market geometry, you go to www.dayprotrader.com, click on market geometry. You can also check the playlist, market geometry playlist by Day Pro Traders YouTube channel. Don't watch it anywhere else. I can assure you that. All right. Day Pro Traders YouTube channel playlist, market geometry, pitchfork tool. All right. So that's why we are here now. So as it's coming down, what did I say to traders? All right. I'm going to wrap it up soon. I'm watching the time carefully because I don't want to go over my time. At this point in time, I'm looking for trend line. I'm getting used to this trading view. In fact, I'm liking it a bit because I analyze DAX 30 today. I have data up to 1975. That's something that can keep me using that software, because if they can give me data up to 1975, well, I think I will stick with them. I will not cancel my subscription. I can hear traders say, yeah. Then we can talk about commodity, Nifty, sensors. Well, we will do that. Okay, if I keep my subscription, all right. But I will still use TC2000 because I like it very much. I'll keep it for sure. So now, when we draw the median line of that second projection, the price also on the edge of it. All right. So map out the chart as I did here. All right. There is another line that I want you to draw. This line, connect this high, June, 1st of June. All right, month ending 1st of June or beginning 1st of June 2007. Connect it to this high here, September 2018 on your monthly chart, and draw that blue trend line. Don't remove it. Don't ever remove it. Don't remove it. All right. Like I said before, to you, prior to bullish signal above the neckline 18250 midpoint target. That's why it's finally resisting. Really bring it back here. But prior to bullish signal, if you see any bullish trading setup above 18250, take it gently. Don't buy into a resistance zone. Break a bow, retest, turn around. Common centralized broker, implement a top-down trading method on the edge of a key level, trend line, or hot spot trading zone. All in all, probably there was a trend, and then we have a correction that lasted up to 2009. Now it is the beginning of a new trend. It is the start of the first wave for the Nikkei 225. Remember that if a new trend has started, that trend can fail. As you can see here, we call this one X. That trend can fail. And if the economic environment is not supporting the price action, it may come back down. But generally speaking, listening to the Japanese Prime Minister saying that the fundamentals are improving constantly in Japan, all right. Generally speaking, most investors, the sentiment is changing from bearish to bullish when it comes to Japanese stocks. So for those of you who are looking for long-term investment, do your due diligence, all right, and find excellent golden nugget in the Nikkei 225, talking about long-term investment, okay, company blue chip stock that became oversold with a brighter future, dominating their sector, and so on and so on. That's why you want to check for the Nikkei 225, okay. So at the end of the day, we are talking about Elliott wave analysis, all right. We have seen that probably there was a trend, a correction, all right, in the shape of, probably in the shape of a W, okay, X, Y wave. It is the beginning of a new trend. Remember that at the end of a WXY wave, okay, we may have another X because a corrective wave is completed, all right? People are expecting an impulse wave. It's what we are now. But that impulse wave can fail again. How do we know? If the correction that followed that impulse wave cancel it completely. So right now, it's looking good. Draw your trend line, so you can connect this point. Draw a trend line like this. Draw another trend line close. Use a multiple pitchfork tool to map out the chart. Now that it goes above the first pitchfork tool, okay, measure the width. I don't have time anymore. Measure the width of this pitchfork tool and project it in the direction of the price. So the lines are parallel to each other as I did before for the red channel. So that can also be helpful to traders. Do you want me to do it now? Okay, let me do it very, very fast because okay, very, very fast. I'm watching the time. All right, am I getting there? I want to go over my time. Okay, something like that. Okay. If this video has been truly useful to you, please let us know by giving us a thumbs up. If you dislike it, mark it down. If you think it's an essential tutorial that can help other Elliott wave traders, feel free to share with your friend on Google+, Twitter, and also Facebook and Tumblr. All right? I really appreciate it when traders share a video, and I say to those traders, thank you very much. Okay? Sometimes I post video first on YouTube, sometimes first on Facebook. Our YouTube channel is 24Elliottwaves. Okay, subscribe today and be sure to click on the notification bell so anytime we are about to live stream a pre-recorded video, you will be the first person to be notified. All right, our Facebook page is Stochastic-Macd. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about 24Elliott wave trader maps out Nikkei 225 index at the start of 2019. So what do I mean? I mean, this video, you can keep it and refer back to it many times if you trade Nikkei 225, so you can look for trading setup around those key levels that I've already mentioned. Happy New Year to you, okay? And see you in 2019. Thank you for watching. We are the GSTW 24 traders.